The Minority Market. Episode 28. What makes a trend and how to spot it. Most beginners look at a rising chart and immediately assume a trend exists. They jump in late, chase price, and exit emotionally when the market pulls back. A true trend is not just a line moving upward or downward. It is the result of sustained buying or selling pressure driven by collective behavior, capital flow, and shifting expectations. Understanding this difference is critical if you want to avoid becoming part of the emotional crowd. A trend forms when demand consistently outweighs supply over time. Buyers are willing to pay higher prices, and sellers are unable to push price back down. This creates higher highs and higher lows in an uptrend and lower highs and lower lows in a downtrend. The minority does not memorize chart patterns blindly. They focus on the logic behind price movement. Who is in control? Buyers or sellers? And how strong is that control? One of the biggest mistakes beginners make is confusing noise with trend. Markets move up and down constantly. Small fluctuations do not represent real direction. The minority zooms out and looks at multiple time frames. A move that looks strong on a 5-minute chart may be meaningless on a daily or weekly chart. Understanding context prevents overtrading and emotional decisions. Another important concept is trend strength. Not all trends are equal. Some are strong and healthy, supported by volume and broad participation. Others are weak and unstable, driven by speculation or short-term excitement. Strong trends usually show steady movement, controlled pullbacks, and increasing participation. Weak trends often show sharp spikes followed by fast reversals. The minority learns to distinguish between these two types. Pullbacks are a natural part of trends. Beginners panic when price temporarily moves against them. They assume the trend has ended and exit early. The minority understands that trends breathe. They move forward, pause, pull back, and continue. These pauses often represent profit-taking or short-term hesitation, not trend reversal. Learning to stay calm during pullbacks is essential. Trend confirmation is another key element. Instead of entering impulsively, the minority waits for evidence that the trend is real. This could include higher highs after pullbacks, strong closes, increasing volume, or sustained movement over time. Patience here protects capital and reduces false signals. Volume adds another layer of understanding. When a trend forms with strong volume, it suggests real participation from larger players. When price moves on low volume, it may indicate temporary activity without strong conviction. The minority does not rely on volume alone, but uses it as supporting information. Another trap beginners fall into is chasing trends at the end. When everyone starts talking about a stock or sector, the trend is often already mature. Late entries come with high risk. The minority avoids emotional chasing. They prefer entering during early or middle stages of trends, not during hype-driven peaks. Trend reversals also follow patterns of behavior. Before a trend changes direction, momentum often weakens. Higher highs stop forming. Buyers lose strength or sellers gain control. The minority watches for these shifts instead of reacting after damage is done. Here is a simple exercise. Pick any trending stock or index. Look at the chart and mark higher highs and higher lows for an uptrend or lower highs and lower lows for a downtrend. Observe how price behaves during pullbacks. Does it recover quickly or struggle? This practice trains your eyes and mind to recognize real trends instead of noise. Another important mindset shift is understanding that trends exist across different time horizons. Short-term trends, medium-term trends, and long-term trends can move in different directions at the same time. The minority chooses the time frame that matches their strategy and personality instead of trying to trade everything. Most importantly, trend awareness builds discipline. You stop forcing trades. You wait for alignment. You stop fighting the market and start flowing with it. This reduces stress and improves consistency. Remember, trends are created by human behavior. Fear, greed, confidence, and capital flow shape price movement. When you understand this, charts become less mysterious and more logical. As you continue with the minority market, keep training your observation skills. Do not rush. Do not chase. Learn to recognize structure, strength, and behavior behind price movement. This ability will become a powerful foundation for both technical and psychological mastery in the market.